Bollinger Bands are an indicator that plots a pair of lines on either side of a moving average. So for example, on this weekly chart, we have a moving average in the center, which is the 20 period moving average, so it's 20 weeks, and we have two lines that appear on either side. The lines simply are two standard deviations, which means that, for example, the average movement away from the moving average multiplied by 2. The idea is that when price gets twice as far away from the moving average as usual, it's more than likely going to revert back to the mean, which of course is the moving average. So as an example, once we pierce the bottom of this Bollinger Band here, the theory is that since it's twice as far away from the moving average as normal, there's a really good chance it'll revert to the mean and go back to the moving average. So in this sense, the Bollinger Bands can be both trend and counter-trend trading indicators, as you know, the moving average was up, up, and away, but you can see times where it was too high. It had actually gone two standard deviations above the moving average and fell back towards the moving average. So you can trade these in several different ways, and traders will perhaps follow the trajectory of the moving average, and was obviously in an uptrend. So in this particular case, what they may do is only buy when we touch the bottom of the band, which, as you see, worked quite well for quite some time until, of course, the trend change. Conversely, some will actually take trades that are above, even though it is with the trend. And the idea of that is of course, it has to revert back to the mean. It's gotten a little bit overbought. A lot of traders will either put on a full position here and perhaps take profits there, and then short here, and then perhaps takes profits at the median, because after all, you are going counter trend. So there are a lot of different ways to use the Bollinger Band. One of the more interesting ways to use it that a lot of traders seem to like is when the Bollinger Bands tighten up, it shows a lack of volatility in the market. Well, all traders know that markets can't sit still forever. So for example, we were moving slightly here, and then the bands tightened up. And as you can see, as they tightened up, eventually we got an explosive move to the upside. You can see that this had happened in a couple other times as well. Like, for example, after this big move here, we had the bands kind of tightening up, and we did get a move. We got a counter trend move and then an explosive up move. Because of that, there are many ways to use the Bollinger Bands, and they are one of the more common indicators out there, and quite often matched up with other ones to give you various predictive signals.